clearly, as we go towards a net zero carbon emissions environment that many across the planet have targeted by the year 2050, and the huge incentives that are being provided for renewable energy, the demand on some of these base metals like copper and nickel is going to be quite extraordinary.
Well, hello and welcome to Assay TV. Today, we're delighted to welcome Todd Warren, who is the Head of Research at Tribeca Investment Partners, based down in Sydney. Todd, great to see you here today. It's been quite a momentous week. This is a very well-timed interview, has to be said. We've just had, obviously, the US elections. Looks like Biden has won. And also, today we've just had the news that Pfizer have successfully, it seems, completed their trials for a COVID vaccine. So how have these fairly momentous news items sort of played out in the mining and metals markets?
Yeah, look, big question to start with, Leo. I'll say, I guess one thing at the start, I'm thankful that US elections are only every 4 years. I think I started with a full head of hair a few months ago, and now look what I look like. Look, it's been interesting times to say the least, and indeed even within the tail end of last week, as we went to bed thinking Trump was going to be the president and woke up that apparently Biden was going to be president. So that clearly changes the landscape as well for our space, for the metals space, and then of course the news last night that perhaps Pfizer have had a bit of a breakthrough with their testing certainly got the market moving with regards to a rotation more towards those stocks which have lagged, the cyclical stocks, and indeed maybe a trade out of gold, with gold being hit pretty hard. So yeah, it's been an interesting time, no doubt, but we are certainly feeling pretty positive, you have to say, about the way the landscape is starting to play out before us, certainly with regards to the demand for commodities, and specifically some in particular that will play to the theme of maybe a smoothing of the waters with regard to trade, global trade. Obviously, if there is a vaccine that has proves to have some sort of high degree of efficacy, that will play well for oil stocks. And then, the background for gold, as I touched on whilst it was panelled last night, we actually feel pretty positive about the background for oil. Certainly in a world where real interest rates remain very low, we think there's still a pretty good backdrop for gold as it plays out.
I mean, we saw gold fall a little bit after the news of the Pfizer results, but then it's starting to sort of recover a bit. I mean, what is your actual outlook for the gold price?
Yeah, look, we obviously had a very big run, and punching towards $2,000 an ounce, and it's certainly pulled back a ways from there, but seems to be solidifying here today. I think as the market sort of stands back and realises that actually the backdrop for gold remains positive, as I said at the outset, we think with the huge amounts of monetary supply, and interestingly, if indeed we do have a bit of a deadlock in the US Congress, if the Republicans are able to maintain control of the Senate, that will actually, I think, lead to perhaps a slower rollout of the fiscal stimulus that Biden was originally planning, and indeed, meaning that the monetary policy has to do a lot of the heavy lifting, would imply that that landscape of low real interest rates, or indeed negative real interest rates, is probably here to stay, and you continue to see that the balance sheets, central bank balance sheets continue to expand, actually plays out fairly well for gold. We think that the market remains still, to a broad degree, underweight in broader generalist investor portfolios towards gold and silver, for that matter. And valuations for gold equities still look very attractive on a long-term basis. So we are still positively exposed towards gold, and think there's still quite reasonable upside to be generated from an investment in gold.
Do you think this pullback has come, at a possibly a good time before costs started to creep up in the gold mining space? So, gold is still at a reasonable price and costs haven't caught up yet.
Yeah, look, it's a really good question. And as you rightly point out, one tends to follow the other. And partly that's because, with the higher commodity price, miners will tend to be able to pursue lower grade material and make some money out of material they would perhaps not otherwise have mined. So their structure tends to shift a little. But obviously cash flows are very strong at the moment. We're seeing free cash yields for senior gold producers. I mean, if you annualize Newmont, for example, on their quarterly, their free cash generation was massive. And if you annualize their third quarter free cash generation for the calendar year, you end up with a free cash yield of something approaching 10%, which, in my experience is not a common occurrence. They've announced obviously a dividend policy, which is very attractive. And frankly, they need to start doing this. It's very much needed to generate the interest or bring back that interest from a generalist investor who has clearly been otherwise distracted by, the bright, shiny things of the tech sector. So they need to have a pretty good story to bring them back.
But it's only really the tech sector who might have outperformed the miners. I mean, 10% compares very favorably with some of the other sectors out there that people could be investing into.
Oh, absolutely. And indeed, if you look at some of the moves that have occurred post the election, or certainly on that day when it went from a Trump victory to a Biden victory, you saw some massive moves in the tech stocks. And that's endemic of where a lot of the flood of money has been for quite some time now. There's clearly been an expansion in valuations in that sector as well, which we think potentially plays out well for the mining sector as that cyclical rotation really comes back towards what are companies that have struggled, frankly, to generate a decent amount of free cash flow through the cycle. But there seems to have been, dare I say it, a bit of a come to Jesus moment for them over the last number of years as balance sheets have improved. They've paid down debt, and we see, for example, some of our positions are very much targeting that shift in terms of that enterprise value from the debt providers to the equity providers as that free cash generation goes towards debt pay down and indeed a potential dividend return. So that's a real theme I think we'll see continue to play out over the coming 12 or 24 months.
How do you think the Biden victory is going to play in terms of reigniting interest in the renewables and e-vehicles space? Yeah.
Look, that was a theme which, or at least a platform on which he really carried through this election cycle. Really, that push towards a decarbonisation of the US economy and a heavy push towards renewable and electric vehicles. And that for us is very interesting from the perspective that there's huge amounts of base metals and rare earths that go into each and every one of these electric vehicles. Now, today, as we sit here today, there's still quite a small component of the overall demand for copper, for example, comes from electric vehicles. But if you look at the statistics, clearly as we go towards a net zero carbon emissions environment that many across the planet have targeted by the year 2050, and the huge incentives that are being provided for renewable energy, the demand on some of these base metals like copper and nickel is going to be quite extraordinary. If we look at just out to 2030, so not even going out towards a net zero scenario in 2050, you're looking at the demand for copper going up some 10, 12 times for copper that goes into electric vehicles. Now, why is that? Well, the amount of copper that goes into an electric vehicle is 3 or 4 times the amount of copper that goes into an internal combustion engine driven vehicle. The amount of copper that goes into a wind turbine is about 4 tons of copper into a typical 3 megawatt wind turbine. So all these lead to quite extraordinary shifts in the demand structure for copper. Now, where does the copper come from? Well, that's the big issue. And indeed, supply of copper has been challenged for a number of years now, not least because the shift in terms of supply and where it's coming from is more and more towards more difficult terrain, high Andes, for example, in Chile or Peru. Obviously, you've got a situation where these very significant mines in Chile, which have been operating for some time but are trying to grow, are struggling because their grade profile is declining. The ESG perspective is becoming more and more front and centre. And clearly the community engagement in the development of new mines is only going to grow. The use of water and fresh water is a challenge. So it's very difficult these days to permit a large new mine. So the world's supply is going to be challenged to keep up with the rate of demand increase that will come from the renewable and decarbonisation theme over what we think will be many years to come. Nickel is the other one which we are very favourably exposed to. Nickel obviously goes into batteries because the nickel is a metal that will assist in the density of a battery. And as we expect more of our electric vehicles, certainly in terms of performance and range, you need a higher capacity battery with higher density. And that invariably comes from nickel, or nickel brings that to the table. So as new technologies, battery technologies are rolled out, it invariably requires more and more nickel. Now, where do you get your? There's a very short list of nickel producers around the world that you can actually get your primary nickel from. So that's where we think there's going to be quite a nice catch-up trade to occur within the nickel producers that can be exposed to this huge demand for nickel as well.
And several ASX companies, sort of have opportunities, I guess, in those spaces. With America, one would expect, I guess, a Biden administration to be more stringent on environmental regulations. And also, you mentioned the challenges of mining in the high Andes. So, Australia as a natural destination for, finding new copper and nickel projects.
Look, potentially, yes. Well, BHP, you only have to ask them about nickel. I mean, when they spun out South 32, they didn't want to impose their Nickel West assets on South 32. They thought it would be too much of a yoke around its neck, which is quite ironic given that it's now one of the most attractive assets in the BHP portfolio, and indeed one they're clearly looking to grow. So how the worm has turned for nickel. But yes, look, obviously Australia is a friendly mining jurisdiction for most commodities, and in as I say, on a global scale of places where you can safely invest with some confidence in your tenure and the fiscal regime. Clearly, Australia is well positioned. And then, of course, as you say, with a shift in the US administration, perhaps towards a Biden administration, I would expect the rhetoric to perhaps change. Clearly, the relationship between the US and Australia has been, I think it's fair to say, despite our politicians' assertions, more strained under the Trump administration. And we would expect that to perhaps settle as the next 4 years rolls out. Whether the US continues to have its issues with China is a point of debate. I think clearly the America First platform that Trump stuck to, I actually don't think will change a whole lot, but the rhetoric I think will. And the way that deals are done between the US and various other jurisdictions, I think will possibly change. But the nice advantage we have down here is that, again, to what I said earlier, we are a stable jurisdiction with a stable form of government, and we have mining expertise here. So that in itself, I think, will lend very favourably towards more mining, certainly for these quite difficult to find metals.
Absolutely. To touch on I go back to a point that you touched on just now, the US-China trade dispute. How do you think that's going to play out under Biden?
Yeah, look, as I touched on there, I actually think the actual platform on which Biden will run is not going to change a whole lot, frankly, in terms of putting America first. At the end of the day, let's be honest, all countries are trying to put themselves first. So it's not actually an unusual stance to take. That said, as I said, I think the rhetoric changes, and so the negotiations will perhaps shift. I have no doubt that the US will continue to try and drive a strategic metals approach, and to really encourage the pursuit of strategic metals within their own borders. The issue they will continue to face, though, is that some of these metals are just not prevalent, or indeed are not as easy to extract in their own backyard. So I think the idea of a trade war, I think, disappears in terms of the aggressive rhetoric. I think the ability to undertake trade more globally between the US and others will continue to expand. I think China and the US is just one case in point of one of those, shall we say, settling of the waters, and that of course is only going to be good for commodity demand, and specifically base metals, I would have thought.
Perfect. And final question for you. I mean, comparing, last week, beginning of last week to this week, how much more optimistic are you feeling about the outlook for the world and for global trade and metals and mining?
Yeah, good question. I would say, we obviously went into last week and into Tuesday's election, with a bunch of scenarios that we're trying to plan for. The outcome that we've come to with Biden seemingly the president-elect, albeit Trump has not conceded yet, plays out for an interesting next couple of months. I don't think there's any denying that. But I think the conclusion we came to before the election was actually, regardless of the outcome, there's going to be a big push towards economic stimulus. The size is the question, and how well it gets through the US Congress is the question. But the reality is that both parties here, I think, are in more of on a stable footing, shall we say, with some of the more explosive rhetoric out of the way. We would certainly be leaning strongly towards a fairly bullish environment for base metals. One commodity we haven't touched on is uranium, which is another commodity we actually think in the longer term plays quite positively towards that renewable / decarbonisation story, simply because clearly it's a very considerable baseload provider in a decarbonised world. Now, there's obviously some not in my backyard arguments against nuclear power, but in an environment where coal-fired power is very much not the flavour of the month, nuclear has quite potentially a very significant part to play. And you only need to look so far as some of the European nations where nuclear is a significant part of their power makeup, and their steps towards a decarbonised future looks very positive. So last week to this week, we are positive. We think it actually plays very well. Clearly, the next few months is going to be potentially volatile as we get some resolution, whether Trump fights his way out of town or goes quietly. I'd probably take the former than the latter, but and that could create some volatility in the market. But the reality is we're now on the back of the US election, and both parties are pushing forward with the hope of a vaccine and economic growth that will come from a continued bounce away from what's been a pretty tough year.
Absolutely. Well, thank you very much for your insights there. Lots to look forward to or look into as we go forward into 2021. But thank you very much, Todd Warren.
Thanks, Leo.